we need this stuff. You can't replace it. You have to have uranium, right? And you have to have an adequate supply, and it can't be mined at current prices. And this is one of the reasons why we've seen uranium spike so much before. When uranium in the early aughts went up to $140 a pound, that was obviously way more than the cost of mining. It wasn't necessary to go to 140. It's just that it was clear that the supply wasn't going to keep up.
Hello there, my friends. Chris Marcus here with you for Arcadia Economics. And today we are digging back into silver and also uranium, which has some similar characteristics to silver. And of course, I get giddy anytime I hear of commodities trading below the cost of what it takes to dig them out of the ground. So excited to have Lewis James back on the show, who joined me last year. And just before we get started, go ahead and hit the subscribe button so you can stay posted on these things as they develop. And with that said, it's great to welcome you in here today, Lewis. How is everything going with you, my friend?
I'm happy as a clam down here in the tropics in Puerto Rico, enjoying, I have to admit, the tax breaks much more than the hot, humid weather, but.
Yep. Things have been recovering there in the past year or so, or I heard it was not ideal for a while, but everyone doing all right down there?
Well, this is a side conversation, but the quick version would be yes, whether people realize it or not. A tragedy is a tragedy, but it does sometimes sweep away a bit of debris. So the new construction that's come in, the funds, the insurance payments, and so on. There are a lot of new houses and buildings going up, and that's creating jobs too. I wouldn't say the place is completely on the mend. The New Deal that they're working out with the feds will help and so on. But it's quite happening, and a lot of people are down here for the tax benefits. If any of your audience is interested in that, they can drop me an email. I'd be happy to point them to sources. I'm not a tax expert. I'm just a beneficiary down here. But I can hook people up with people who do know if they're interested.
Well, we'll put that contact info below, and certainly I think some folks may take you up on that because a lot of libertarians and gold, silver, commodities crowd has been going down there. Good to hear it's recovering, and interesting because it's similar to what happens in markets where, a recession or a crash hits, but if you allow things to rebuild, you can come out ahead. And so to dig in, one of the markets where certainly we have some fascinating dynamics, and I think we'll start with uranium first. Maybe you could give people an overview. We were both at the Sprott conference again this year, and I hear Rick Rule talking all the time about how they're selling it for $25 a pound, digging it up for $50 to $60 a pound, and making up the difference on volume. Are those numbers still about where we're at, and how does that stack up?
It's a standard Rick Rule joke, but to be fair, if you have a big mining concern and you're just close to profit, and you could actually reduce your cost by increasing your throughput, you're not really making up a loss on volume. You're actually changing your cost structure. So it's a fun and clever quip on Rick's part, but there is some logic to why mining companies do this sometimes. But that's not what's going on in uranium. So there's a lot we can say about this, and keep it brief. The overview is, as you say, though, the average cost of production globally is around really $40 a pound. Some of it's considerably cheaper than that. The Kazakhis are famous as the cheapest producers in the world today. But even their best mines, not all of them are like that. So the average is a realistic number. The 60 plus number is the incentive price. That's what it would take most companies to bother building a new mine. So that's really quite an eye opener because it's more than double current spot. Right. So, but the problem is this has been a case for years. If we've had costs, well above the spot price for years. So, the logic is, well, of course, the price has to go up, but when? And I understand people get impatient. So I think there's a good case for when being now, actually. I myself was out of uranium for quite a while. When I launched the Independent Speculator in 2018, I said, this is something to watch. This can't stay this way. The lights have to come on, And for that to happen in less than, the decades, uranium can't be replaced. We need the nuclear power. The windmills aren't going to cut it right away. So, but the prices will remain low. And I said, I'm convinced of this thesis, but I want to see the market turn around. I want to see a sustained rally. I want to see higher prices. I want to see what our technical friends, like to say about a series of higher lows come in before I get too excited. And that's what we saw actually starting to happen in 2018. So now I have gone long. Uranium is down if you look at the big picture, but if you look at the bottom since 2016, we have seen that higher series of highs and lows. That trend remains intact. So you combine this with the fundamentals of, we need this stuff. You can't replace it in less than decades, and it can't be mined at current prices. And, the Japanese are restarting a lot of their plants. They're supposed to restart 30. The Chinese are building them gangbusters, right? I mean, this is happening now. So that's one case. Then on top of all this, there's the whole Section 232 thing in the United States, where we don't have to get into all the details of that, but there was a petition for help from the United States government on the part of US producers. And this caused a disruption in the market. I personally think it caused a lot of the buyers to hold off buying or entering into new contracts with the miners until they had clarity on what the US government might do. Right. And that, there's a whole lot of history that we don't need to get into there, but that should be coming to an end soon. Trump established a working group. They're supposed to report on October 14. That doesn't mean the 15th that prices will take off. But it should mean that we have some resolution soon. And whether that's a boost for US producers, which it could be or not, it should dispel the uncertainty, which should bring the buyers that have been waiting to see what happens back to the table. So I think there's a very good chance that uranium takes off in the final quarter of this year that we're in. But if not, the fundamentals and the technical trend that we're talking about still tell us that, still paint a bullish picture for uranium.
Yeah, and it's interesting you mentioned Section 232 because obviously anytime there's uncertainty in an industry gives businesses something else to plan for. And especially where we see trade war on today, off tomorrow, I don't know which one it is in the last 10 minutes. Has that made it harder for businesses to plan? Because, it's like Trump might say this today and then you don't know what happens tomorrow. How has that been handled?
I'm not so sure it's really worrying about what Trump might say. For the utilities that buy uranium, right? They have to have years-long plans, and they have spreadsheets that say we need this much, inventory on hand to make sure we have, assured supply to keep the lights on. And I can't stress enough, we're not talking about something optional here. They can't just pour gasoline in that plant instead, or coal or something, or even thorium, which is, some people's preferred, it's not fissile, but fertile material. You have to have uranium, right? And you have to have an adequate supply. And these guys, they're not going to change their plans on a tweet, unless the tweet is we've banned uranium or, banned nuclear power, that maybe, but, that doesn't happen. So, but what could affect things, less so much with China. I mean, China can get its uranium wherever it wants. It's a global market. It's fungible. So whatever the U.S. does with uranium isn't really going to affect China much. But if things were to heat up with the Russians have a common market sort of with Belarus and Kazakhstan, where a lot of this uranium comes from. So, the Kazakhs, they want to sell their uranium. They wouldn't be too happy if the Russians tried to get in the way. But there actually is a treaty platform there that could cause problems if the Russians ever decided to interfere. And that's one of the reasons why the United States is looking at its dependence on foreign uranium, which is more than 90% of the US's uranium supply comes from foreign countries. Now, most of that's not Kazakhstan. They're a big producer, but most of it's actually Canada and Australia. And I'm not really worried about our good friends in the Great White North cutting off our uranium supply. But
unless we start a trade war against them too,
but
so
with their, we already did that that lumber thing, and who knows? Never say never with this administration. Whether you're pro or against, the one thing we all agree on is it's pretty unpredictable. But my point is just if politics were to interfere, from that supply from Kazakhstan, it would likely be through Russia. But because the market is fungible worldwide, that impacts the prices everywhere else. So in this context, you have large buyers, and despite how unpopular nuclear power remains, the U.S. is still one of the biggest nuclear countries in the world. We have more reactors than almost anybody else, though that's changing. So we're a significant player. And what happens in the U.S. and what happens in its relationships, what gets cut off, it will impact. And therefore, the U.S. buyers, again, this is very important. If U.S. buyers are basically sitting back and waiting to see what happens, that has a big impact. It's very interesting to me in that context that, this has been going on all year, and uranium prices haven't tanked. They've actually held on. And I think everybody knows that when the logjam breaks, these guys are going to have to come back to the table. And there's no way the miners are going to agree to mine for $25 a pound. They can't make money that way. So to quote our friend Rick Wool, I see this very much as a when, not if questions. And when questions, if you bet with money you can afford to leave there until you're right, that's how we have big wins, with when questions, not if questions.
Yeah, and certainly it makes it a lot easier if you can have patience, where you don't have to be a genius to see some of these things are out of line, and just allow that to work to your favor. And perhaps to that point, I have a quote here from Fission Uranium Chairman and CEO Dev Randhawa, where, hopefully I'm pronouncing that correct. He writes, "We need 195 million pounds, but we produce 100 to 30 to 140 million pounds. Is that about in line with what you're seeing? And any comment on that?"
Well, Deb's right about the use. I'm not sure about the production, because you have secondary supply issues clouding that picture. And when post-Fukushima, Japan started selling off uranium, it's not a very transparent market. These are private contracts. And so you don't know in advance what's going to happen, and the contract prices trickle down to the spot price. So it is a bit messy, but that's a big part of why prices got pushed down so far below the cost of production. Is there were people who had 100 years supply of uranium, the Asians think long term, who thought they didn't need it anymore. And they started dumping. They didn't care what price they could get. You're a Japanese utility looking at massive losses in the face of all the lawsuits and all the follow-on from Fukushima, right? So you get money wherever you can. You're not going to use this anymore. Japan just shut down all the reactors, so might as well sell it at whatever we can get for it. But suddenly Japan's, realizing, well, you know what, the windmills aren't going to be enough. We can't import enough LNG. We need our reactors, the safe ones, to come back online. And so then that changes your equation. Suddenly, well, maybe we shouldn't sell off our stockpiles. Maybe we might need them after all. Right. So that's one thing. The other thing is there have been, I understand, some technology improvements where the processors can get more of the enriched uranium for we don't want to get too technical. There's the standard work unit, the SWUs that people price and so on. You'll hear about these things, but it boils down to greater efficiencies. Also the centrifuges, they can underfeed and, put a little more work into it and get uranium out just the same, or the enriched uranium that you use for the fuel rods. So there are other factors in here. Mine supply is not the only supply. But at the end of the day, a little bit more efficiency, or even a significant improvement in efficiency in processing, isn't going to substitute for mining. You still have to get the stuff out of the ground. What these other factors could do is put off payday. This is why I talked about patience. I'm convinced that when the buyers come back to the table, we're going to see some action. And I'm hoping that will be soon, by the end of this year, possibly. But even if I'm wrong about that, it doesn't happen. You still have to get the stuff out of the ground. And so that gives me confidence. We call this an asymmetrical trade, right? That we may get a near-term boost, but if not, the chances of uranium going to zero are basically zero. It's not going to happen. It must be mined, and it can't be done at current prices.
Yeah, and what's the lag between when, let's say, we have higher prices and new projects go into action? How long does it take between you make that decision and you actually have what you need?
Well, that's an excellent point, because let's say prices go up and they start incenting new projects to come online, or even old mothballed ones. Bear in mind, the big producers, even the Kazakis, are mothballing mines because they can't make money on all of them at current prices. Or if you're chemical, for example, it's not that you couldn't make money with your highest grade, most profitable mine. It's that why would you mine that out at low prices when you could make a ton more money producing the same uranium in a couple of years, as long as you believe that, when prices are higher. It would make no sense to deplete your mine for pennies when you could make dollars or more in the near future. So before we get to incenting new projects to come online, we talk about the existing ones, right? And I talked to an engineer who worked at MacArthur River, for example. He told me it'd be at least a year to bring that puppy back online. And we're not talking about something that was mothballed back in the 1990s or something. This was just shut down recently. But you know, a mine is not something that sits still. You have to have a lot of care and maintenance just to keep it from sliding back or flooding or degrading in many different ways. It's a messy hole in the ground. It takes a lot of work. So, you know, and if even that one takes a year to come back online, some of the others would take longer. Maybe the quickest ones to respond would be the in situ mining guys that don't actually have tunnels and stuff, but just have a series of pumps. But even those guys are talking about, you know, maybe 6 months to a year to bring their mines back online. So I would absolutely expect a significant time lag between higher prices and actual increased production. And this is one of the reasons why we've seen uranium spike so much before. When uranium in the early aughts went up to $140 a pound, that was obviously way more than the cost of mining. It wasn't necessary to go to 140. It's just that it was clear that the supply wasn't going to keep up. At the time, you know, there was a nuclear renaissance. This is pre-Fukushima. And there was a lot of talk about the BRIC countries building all these plants and things. So the price went way ahead of production cost. And I think we can expect the same to happen again, because it will take time for the actual mine supply to catch up with demand.
Yeah, and I hear those stocks certainly move quite a bit when we do finally get the move in the underlying. Similar to another asset that I talk about a lot on the show, and I know you dig into, which is silver. Another one where we've historically, when the price of the underlying moves, we've seen some of those miners do extremely well. For folks who may be not as familiar with the concept of how you get some leverage on the price move of silver if you're holding a miner, could you maybe walk through how that works, and or a simple example?
Sure. I'd love to talk about silver. It's actually possibly my favorite metal right now.
Yeah.
But before we move on from uranium, I do want to say, just because I think it's the responsible thing to say, you know, I'm not a cheerleader, right? I'm not here to say, yeah, do this, do that. I'm a rational speculator, and I think you have to confront the risks as well as the rewards. And if there is another Fukushima, right, and bear in mind, you know, that was a tsunami. That was a natural disaster. That's what killed all the people. It's arguable whether anybody has really been seriously impacted by the radiation released by that plant. You know, we need to get into that, but it doesn't matter. It doesn't matter. People think Fukushima, and they think all those dead people died from the nuclear power plant blowing up like Chernobyl or something. It's not true. But they respond that way. And I just have to say, if there is another Fukushima, or, you know, heaven forbid, a Chernobyl or a 3 Mile Island, another much more benign than perceived accident, it's not going to matter. Uranium prices will tank anyway. Share prices will tank anyway. It would be very difficult. Now, you know, these accidents don't happen all the time. We learn from each one. It'd be, you know, if there's another tsunami in Japan, the same thing wouldn't happen, right? So I think, given that a time frame for the uranium place to work out is a year or two, and you know, if you want to say the accidents happen every few decades, you know, hopefully there won't be another accident. But I just think it's important to keep this in mind. This is the one thing that could really kill the uranium thesis. I mean, just kill it dead. And that is possible. I don't want to tell anybody that's not true. I hope that's clear. I don't want to too much, you know, weigh on negative, because of course the positive is some of these stocks are not just 10 baggers, but they can be 100 baggers in this space because of the leverage to the underlying commodity. But you have to understand that you're entering a high risk speculation here, and that there is potential for hurt. Okay, so that said, let's talk about silver.
Which will be in part 2 of my interview with Lewis, which is going to be posted tomorrow. So hit that subscribe button so you'll know as soon as that goes live. And thanks as always for watching. Do appreciate that.